go live. Okay. Mm. Okay. Now, if good morning, you're welcome. If you guys understand watch my yesterday weekly forecast on the video, I was particularly trade thinking of taking trades of this space because that's what I saw and that's what I was intending to do. Euro USD GU right now, they are in a mess. So it's not like they don't want to move, but the market is just stuck in one place because of indecision. So you can't be looking at those pairs right now. And that's what I said on the video. So stay away, try to trade any of these two pairs. Just stay away trying to trade any of these two pairs at the moment, at least for this week, this very week 42 that we're in. Stay away from GU and Euro USD. Let the market give us a clear direction, then we can start looking at opportunities. That's the way I see that. And I said, okay, fine, let's look at other pairs, which we did look at on the video, my weekly analysis. For those of you watching on YouTube, if you have not subscribed to the channel, please do, because that's the only way you can get to receive notification every week. And every Sunday, you're gonna get a notification of analysis for the week, trading coming week, starting from the opening night. So you want to get ready by preparing your chart, using that information to guide your decision and ensure that it tally with your trading system. In other words, you are using it as a bias, as a directional bias. So it will help you to make your decision right. That's why you should be on the channel. That's all. And subscribe. And those of you already in my class, in my Telegram group, this is a good opportunity for you to just take advantage of this because I send information to you every week. You have to look at it in detail. Don't see it as a normal thing or this is a usual analysis. No, the market is always dynamic. The market is changing over time. It's always creating that momentum up and down, up and down. So when you see that we're giving you analysis weekly, just take advantage of it and see in the direction you want to trade. Like gold. Gold already almost hit TP this morning. And I did this analysis why price was right here. Let me show you. I did the analysis why price was here. That's when I did the analysis yesterday. Go and watch the video. I told you guys that this price is coming down. I said on the daily we are bullish. And because we're bullish, we should be looking for structures. And we can see that this was a break of structure to the upside, a break of structure to the upside, a break of structure to the upside. So we're bullish. So for us, we can see this imbalance. As this imbalance was created for us, all we needed to do was to wait for a pullback, which I already analyzed in the market on the pair, on the video. And that's exactly what it, and I told you, watch it. It might tap into this order block. And I mentioned it. I said, watch it. It might tap into this other block, but nevertheless, it's going to reject from there and then rally. Because I said, even though the entry going to be somewhere here and give you 1 to 2 by targeting minus 27, I said, but again, price may come to this level before it goes there. So I said, I marked out this area because I don't trade gold often, but I could understand the volatility in the market when gold is so volatile in such a way that it will like to stretch by leaving multiple weeks by tapping into liquidities. Gold like to tap into liquidity zones. It's a crazy commodity. It just like to take liquidities on lower time frames. So here is orders that are lying there. That's why it's called order blocks. There are orders lying there, and it came back to tap into those orders to activate them. And that's exactly what it did. And guess what? If you were targeting here or there this morning, you'll be in profit in gold. And you, if you like, assuming you were using this order block for entry, you would have target 1 to 4 already, or 1 to 3, and you're out of the game. But that is just on individual perspective and trading. But this is a system I feel that is mechanically followed. You just have to follow it easily. There's no put a sell, a buy limit there, a buy limit here if you want to use the two Fibonacci level. But I think what the market did eventually was to tap into 70, tap into 71. So if I was to use 71 on that particular fib, you see exactly where the order block is. That is exactly where price got to. So again, don't limit yourself to the idea of the market getting to 50. Sometimes gold can be very, very funny. And if you see what the market did on this one, if I change the fib, you will notice that exactly this is the fib I used to trade. This is my fib. 88 is not there actually. So I remove 88. So this is my fib. This is how I set my fib. And I'll put my entry here. That's my fib. And if you notice, if I was to use this fib settings based on my analysis, and I said, okay, we're expecting price to get there. And it actually got there. See, it actually got there. So again, you have to be confident in your strategy. That's what I'm trying to say. Stick to the plan, be confident in your strategy, and expect the market to respond. If it goes against you, okay, take the loss and wipe your face and move on. It doesn't mean you should quit. It means you should move on. Keep trading. Keep trading. Just keep learning. Just keep practicing. Because some seed will fall on good ground and it will produce. You know what I mean? So, in other words, that's a parable. You would definitely hit the right thing. You will hit the system that works for you. And you will definitely be profitable over time. So look at this. Exactly. Market open created a gap. What does that tell you? It means that the market will go back up to fill up that gap any moment soon. Capital exactly. Price executed exactly at the fee. So here now we have what? 1 to 3 risk to reward. So if I was to target this high, I still get 1 to 2. Clean trade. By this money, you would have banked your money and said, I'm done today. I'm no more trading today. Period. If you had just followed the analysis, especially those of you that requested for gold analysis, I think you guys got it. Congratulations. And TP smashed. So even though you're still targeting here, there's possibility that it will come up there. So just be patient because it's a bullish market anyway. So it might be pulling it back down now. So this is retracement. So I can still decide to say, okay, I see a retracement happening from here to here. This is another trade. For those of you already in the trade, leave your trade until TP smash. Except you're afraid, don't be afraid. Just leave it. This will be another trade opportunity. Guess what? There is another order block here. I'll move this order block. This is extreme order block. All right. We call this extreme order block because it's very close to stop loss. Okay. So this will be an entry zone for this new setup, and this will be your stop loss level. And why is that? Because we see a retracement going on. So the worst case scenario, the market will come back again to this level and then rally up. As far as we are bullish and we see liquidity at this level, price is still going to rally up. We are bullish on the daily. The daily is still very bullish. So we want to see that we are buying in the direction of that pair. So what do? We can target again another 1 to 2, clean. So wait for price to come in there, set your buy limits over there. Any of them, you can use 2 of them. If you want one position, use one position and you put it on 61 or 71. You set your buy limit and you put your stop loss there. You fold your hands and watch. Expect the market to come into that direction. Period. That's the way you want to trade it. Now, that is exactly what we have here on gold. So gold has been We already achieved the goal of that. If you already entered a trade based on the analysis, what about this pair? Now, this pair, which is called Euro USD, of course, the market is bullish on the daily. We wanted to sell a retracement, and that's what I thought about selling, trading against the trend. When you are trading against the trend, understand that the market will mess your psychology up like this one. Why? The market is bullish. So what? We have a break of structure on the daily to the upside, bullish rally. Now, this is supposed to be the new impulsive move to the upside. So there is a retracement, but it's not trying to retrace as quickly as we possibly thought it could. So what? It's playing around because there are bullish momentum. The bullish momentum is trying to play around. So it might play around for a while, mess up your psychology, and eventually it come down though. And tap into this region before going up. So all of this movement will mess you up because you're trading against the trend. And that's why we have this pair doing this behavior, just trying to push up as though it's going up. But remember, there are gaps here that you need to fill. So all of this movement that is going up for is just a sentimental, uh, impulsive move that may create a fear in the mind of a trader to say, oh, it's coming against me. Let me get out. You have a stop loss here. So stay there. That's it. So we have another block, which was, it played around that other block for a while. And after that playing on a block for a while, it decided to say, okay, I'm not going to continue to the downside and then rally. So here is where you're looking at price action. This area here. So there's no profound liquidity here at all. There's no profound liquidity because the liquidity that was here on the left side has been taken by this week to the upside. So all of this is just an exaggeration in the lower time frame. Price is just trying to, pump up because it's bullish momentum on the daily. So that kind of reflect. Why are we trying to sell it on the smaller time frame? I already explained to you if you watch the video carefully. I told you that when price retrace, they will always retrace to either 61 or 50% level. According to this retracement, it hasn't gotten to that level. So there is no proper retracement that has been done yet. Neither is price beginning to rise to the upside. So we are selling the retracement, as you can see. That's what we're trying to do. We're selling the retracement. Look at where my mouse is on the daily. And you see on the week, on the 1 hour time frame, you see on the left, on the right side, that's where prices are. So our stop loss is somewhere here, which is on that liquidity area. So we expect that price will still drop to the downside. And look at where our TP is. Our TP is just barely lower than this level here. So this is where our TP is on the lower time frame. This area, this is where our TP is, right? It's not even just a little bit like that. That's where our TP is right now. That's where liquidity is sitting on the daily. So I'm expecting that candle that is printing now to rally down at the end of the day because the previous daily candle was bearish. So, like I trade on my other day trading system that I taught my student, which is pre-daily high and low, and using the pre-market high and low as a strategy. I told them, look, if you put a line there, for instance, you look at that daily and you put the previous daily high. That's the previous daily high. And that's where our stop loss is, around that level. So if price push up and break that high, then we are wrong. If it doesn't get to that level, we stay in the game. That's the previous daily high. That's where we put our stop loss. Because the previous day is bearish. And because it's bearish, we should expect the market to close bearish today. Based on the retracement, we are not sure yet. but we are just expecting that. So I have the next level was this low, which is where the liquidity is. That's the market low. That's the previous day low where we are targeting as TP based on this strategy that I just showed you here. Now, this is the imbalance and market structure strategy. That's what I taught on that I used to do the analysis of the week 42 on my YouTube channel that I just posted last night. So that's the one I use. I use the imbalance and market structure strategy to do the analysis with Fibonacci retracement entry. That's what I use. So, but if I to combine both strategy and look at the day trading strategy that I use on pre-market high, pre-daily high and low with pre-market high system, if I look at it, I'm still in agreement with the system. So that means both of them are still telling me the same thing. They're still gonna, I'm still expecting the market to drop. As long as I'm in a safe place, putting my stop loss in the right places and expecting to take TP in the right places, it's just a matter of patience and time to allow this trade to come all the way down and hit the TP right here, right there, which is obviously the pre-market low, the previous market low. If this market is going to retrace from the daily time frame, this is exactly what we're supposed to expect. That's the reason we're selling it. And I know it's a bit complicated for those of you who are new to trading. Don't worry, stay long, stay along and watch. And with time, you get it. It's just a matter of time. If you stay long enough, you get it. Believe me, if you stay long enough, you're gonna get it. Now, remember the daily liquidity level, that is so if they are stretching towards that, it means that they want to quickly tap into that. But we can see that there is no much liquidity that is sitting there that is much because we can see that price already created multiple liquidity gap in that area. So it's not like there is an imbalance there that it wants to tap into or something. So all of that is understandable. So the market creating that push up this morning, if I was to go to a lower time frame using the daily market structure, I will be targeting now buying this market on a lower time frame to target the pre-market high. But again, that will not be my trade because the market is previously bearish. I would have been looking for a sell, not a buy. So that end the question on that. So let me move to AUD USD. So look at this pair beautifully. You see that we had anticipated to buy here. I'm not in this trade yet. I didn't get on this trade. I only entered two trades, and I'll show you one. I think I'm on this one. Like I said, I'm on this trade right now that is going on. But let me show you this AUD. Why is this? Why is this going on? Because we have liquidity here, and it normally happens like this. The market will create that pool of liquidity, just the way I was explaining the pair previously. You can see now the problem with this pair right now that the previous day was bullish. We are still bearish in the market. Okay, now this retracement is bullish market on the daily, but we have a structural bullish market. The market is bullish on the daily structurally, but there is a problem. The problem is market is now rejecting at this level to try to rally up. That means a pullback to the upside. The market wants to continue the uptrend, but is struggling within this area. That's why you see this area is being very is in a consolidation mode. As you can see, this very area. So if you are in this trade, the problem will be that as long as the market created a pre-low by breaking below the previous market low before it opens, or when it opens around here, it broke below the previous daily. You see, it closed below. It opened, market opened with a gap, because this was where the market closed. Okay, now the funny candle there, very funny candle. And today the market opened, there's a gap there. And then guess what it did? It dropped, it went up a little bit, come down right now where it is, all the way down here. It's trying to go back up. Now, if you notice on the 1 hour time frame where we are, there is a gap. Look at it. It's not properly filled. That's number one. So, question, why is it coming down? Because there is liquidity. And that's why when you do this kind of trade, you have to be very careful not to put your stop loss on liquidity. But this kind of trade, sometimes you risk it. There are liquidity pool here. Of course, many times the market have tapped into that level. We have one, two, three, four times. Market tap into that level. So we are actually sitting on liquidity, which is obviously affecting us right now because the market is trying to come down to that area, fill up these weeks before rallying up. There is a struggle. So we have consolidation. So right now, if you enter this trade, let's say you activated your trade on the 61 or 71, you are in a drawdown a little. But I tell you what, it is nothing to fear because you might be shocked. The next candle might rally up, and at the end of the day, you are in profit. So that's the way it is. And a lot of times we couldn't find this one is the extreme price is still playing around the other block, which is already mitigated. The other block is already mitigated. We can see it here. It's already mitigated. So that's the reason price is trading in that zone. It's no more valid, but price is still trading in that zone because of liquidity that is at the bottom here. So it's attracted itself to that liquidity. I get it. I get it. It's not our fault. The market does that sometimes. So with these liquidity levels at this bottom, it wants to tap into it. But if it doesn't, that's fine. It's nothing to fear. Leave your stop loss. If you're already in trade, don't touch it. Just leave it. Don't close your trade. Leave it. You might be shocked. We have 30 minutes, 33 minutes on this candle printing. You might be shocked that this candle will close indecision. And then the next one will rally up crazy. You might be shocked. And you might still be shocked that the market hit TP. Look at stop loss. It's just 10 pips. It's 10 pips away from what we're targeting. So it's not a big deal. All right. So let's look at the next pair. Beautiful. Now I'm on this trade. This is the second trade that I am on, and price is just there. And I'll show you why. I did this analysis yesterday. Watch the video again. You see. Now, if you check the daily, you can see the previous day was bullish, right? So now we have the next candle being bullish. Crazy, yeah? But the truth is, we are bearish overall. We are bearish overall based on the trade pattern that we have. The structure is not that smooth, it's not that beautiful. You can't understand it if you're a beginner. But guess what? We have this swing high to this swing low. That's the swing. So as long as this swing high and this swing low is maintained, every other structure is irrelevant. These are microstructures. They make no sense. What we want to see is that a break of this low or a break of this high, and then we're done. But guess what? This is daily time frame. It's a daily market structure. Again, another thing you want to look at is what is it doing structurally? It's heading down. As far as I'm concerned, it's heading down. Every microstructure is still pointing to the fact that it's creating lower highs. Of course, there are liquidity pools everywhere. Like I said, there's liquidity pool at the bottom and a little liquidity at the top. But I'm anticipating that the market will go down. So for this reason, I decide to risk it because if I check the 1 hour time frame, I can literally see a pool of liquidity sitting up here that the market will come and tap into, knowing that it's already taking out liquidity that was sitting up here. Let me show you. The liquidity that is sitting up here. All right? That's the liquidity sitting up here. Price just took it out. As you can see, all the liquidity sitting up here was tapped right now. So this liquidity pool has been taken. And if you check, we only have order block here, secondary order block, extend, what do you call, extreme order block. Worst case scenario, to tap into this extreme order block, which will also give you a fair value gap. For those of you that trade smart money concept, you see that there is a fair value gap over there. Worst case scenario. And as you can see, the first week into it, tap into that fair value gap a little bit. So I think this market is going to crash later. So that's why I'm on it. I don't want to explain um, further than that because it's so clear. There's nothing. If the market chooses to go higher and higher, of course, there are liquidity here, which we be attractive. Um, I get it. That's part of the risk in trading, though. You just have to be there to take the risk. But if you look at the structure wisely, you see that the market created a break of structure this low. This is an imbalance, and the market tap into it, as you can see, and is reacting to that fib retracement level that we expect. So that is a sell zone. If you were to look at the fib as a discount and premier level, looking at the equilibrium, which is 50%. So if you're looking at it that way, then we are in a sell zone right now. So rightly placed, we should expect price to start dropping from there. That's the reason why I'm selling that. And I'm in a trade of that pair right now. So I'm in these two trades. One is heading against me, as you can see, it's pushing up crazy. And the other one is in my favor. So it's balanced. So one is against, one is in my favor. So I'm looking at the one that is pushing up, which is this particular one. And I can see the reason why it's doing it is because, again, most of that pair like AUD USD is going to take out liquidity. As you can see, it's coming to the liquidity, which will be eventually a stop. So there will be a stop there. So this is one of the reasons why um, when you're trading, you spread your risk. You have to spread your risk. When I give different analysis, don't stick with one pair and say, okay, I'm going to trade this pair, only this pair I will enter, except you understand the pair. Like this one now, this is like taking a stop loss already, as you can see. And where is that? Because there are liquidity there, it's coming to fill up this, all liquidities. It's just coming to fill it up and eventually reject at that level and rally up if he wants to. But that's what he's trying to do. So at this level now, you can have that trade as a loss until stop loss is hit anyway. But this one is still in a good position. And this one as well is still very much in a good position. But it's trading similarly with AUD USD because of liquidity at this level, all this week that was created. So you can see that those multiple week is a rejection to the upside. Again, it's coming back to tap that level again and then rally back up. And that is affecting this one as well because we have multiple weeks here at the same time. And we can see that it's trying to push up to tap into that area again to reject. So, but this is one of the things that psychology is very important. Leave your trade. Don't babysit it. Put a stop loss there, put a tip in there, get out. Leave it. If your stop loss hits, let it hit. It's part of the game. You're paying your school fees. You just have to learn that trading and losing is part of the game. You just trade and lose, trade and win. So when you start winning and winning and winning, based on your confidence in the market, it gives you a sense of fulfillment because you know that you are the one doing the analysis, you know exactly what you're doing, and you understand the market now. So that is in your favor. But not to trade at all at the fear of, I'm going to lose the money. I don't know. My money is going to be gone. You are not ready to trade yet. Guess what? Start another business or something. Go do something else. That's the truth. What do you think it's like? A child's play? No. Trading is hard. It's more difficult than being a medical, a surgeon, a medical doctor or whatever. It's harder than that. Let nobody deceive you. Trading is tough. You gotta be tough to be on it because it will stretch you. If you are not patient at all in life, you can't win in trading. Forget it. Impatient people can't trade. Don't let them deceive you. If you are impatient as a person, tell yourself trading is not for me. And I agree. If you don't have self-control, you can't control your emotion. You don't know how to manage your emotion. Trading will be difficult. Not that it's not possible for you. It will be difficult because that's the key to winning in trading. Your ability to manage your emotion. Strategy is everywhere, and every strategy will work for you at one time or the other. But your emotion is your house, is in your control. You are in charge of it. So we can see that affecting traders day in, day out. And that stop the inconsistency, making them become consistent. It's make them become inconsistent. It make them become fearful, greedy, and all of these things that affect them psychologically. Now let's say this trade. I'm in this trade. I'm on drawdown right now. If you just look at it and be staying there, oh, the market is going against me, and you're crying and looking at it, you will close out already, and you feel comfortable as though you've closed out. Okay, I've closed out. I'm happy. But what you haven't learned is the lesson of patience. What if this candle did not hit the stop loss today? What if? What if the candle, the next candle, this candle closed indecision and the next candle drop? What if that was the case? Would you regret your action of closing out the trade? Yes, you will. That's what many traders do. They become personal non grata, angry with themselves, and say, oh, I should have just leave this trade. Why didn't I leave this trade? That's what I'm saying. Set and leave it. Control your emotion. Manage your risk, and you'll be fine. That's the best advice I'll give to you because that's what I've learned over the years in trading here. So I can tell you that. Look at that. Nearly stop loss hit. Guess what? Is rejecting. So if you close that and answer, close that. Now, and you still have minutes left on the candle, and the candle close in the close bullish. You will start beating yourself up. I should have left that trade. I wish I left it. But I told you, stop loss is stop loss. TP is TP. Don't touch it. That's why the rules are there. It's always the rules. So, um, get that and you will understand the rest. The next one is despair. Again, is doing the same thing, which is this New Zealand US dollars is doing the same thing. Just because you enter the trade here doesn't mean we are wrong. The market is just unsettled. The market is not clear right now, but we are trading. We know that there is an imbalance here. There's a proper imbalance here created already. The market will come to fill it up. So we know that there is an imbalance that has been filled already, semi-imbalance filled. All of these things is creating market structure for us. We can see a break of structure to the upside. So we are in a micro trending direction on the 1 hour time frame. So we're trending up. Why is that? Because we are expecting a retracement on the daily. This daily time frame created a break of structure, and we expect a retracement to the upside. And because we expect a retracement to the upside, this gives us the opportunity to buy the retracement on a lower time frame. And then we can just look at market structures and be taking it up, 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 up like that until we get to this key level, which is 62, 0.62490 on New Zealand USD. Once we get to that area, stop buying. It's time to sell. That's all. Understanding this whole movement will help you to gauge your interest and then focus on what works and stop all this trying to get different system together and trade all these multiple system and be confused. All right, very important. So this GU Euro USD at the moment, we are not looking at these two pairs because they are stuck in one place. They are not moving. So we want to leave those two pairs for the week until we get a clear direction. Now, for those of you that are interested in what I call the echo trading, which is algorithm trading, automatic execution of trade, because you have problem with your emotion. Because the reason for um trading um algo trading, which is algorithm trading, which is expert advisors and using expert advisors to execute trade, is to manage your emotion, is to remove the emotional attachment to trades. That's the biggest problem of traders all around the world. Forget every other story. Risk is not the issue. The biggest problem is psychology. Psychology means that you are emotionally attached to the trade, that you can't control your feelings, you can't control your patience, you can't control every other greeds that comes in based on trade. So you want to try to manipulate things. So human intervention is what is causing the problem, because your emotion is the one causing it. So you want to systematically put things to work. Automation. That's why we have AIs everywhere today. Everything is going into automation. So automation is not a bad idea at all. Let nobody deceive you. I still, I still dump my cap for manual trading, technical analysis, and all of that. But it's helping me today to program automation. I can use my technical analysis to program automation. You see now? For instance, I created a system which between this past few days, I created a system that trade the pre-market high and low, and pre-daily high and low. So I trade that as a system. So I was able to create a system automation that would do that for me. But based on a system, it's telling me that I can't have trade every day. And that's the reason I like it, because when you do pre-market high and low, you think you must trade every day. You think so. So you come to the chart as a human being with all your emotions cap on, and then you want to force trade. And then you keep losing because you're trading multiple times and try to catch every pre-market high and low. You try to catch every pre-daily high and low. You want to do all of this stuff. Break and retest. You try to catch everything, and your emotion is invading all those processes. And you're losing more money, and you're angry, you are not really consistent, and every other thing is affected. You don't have time for other things, especially those of you who have families oriented. You have family members, you have children, you have husband, you have wives, and you have all of these things to take care of. You have other things that you do. So all of that put together, and if you stay on the chart for 8 hours, 4 hours, 5 hours, and you do that every day, and you are emotionally drained, mentally drained, and psychologically drained, and then at the end of the day, you lose money, and then you're angry. What do you think? Who do you think is gonna reap all of the anger and frustration? Your family members, your husband or your wife or your children. They'll be the one that you're going to dump all your anger on. You pass on the aggression on them, and then you wonder why things are still getting difficult and you're frustrated in trading. And some of you, they will advise you to stop trading anyway, so if it's not working. So I encourage you to look into automation, because I do look into it. And just to show you an example of what I'm talking about, I had a system here which I'm back testing, which I created myself. I use a software that I created. This is the code. I'm still working on the code. These are the codes here for you to see it. And it's called pre-market. Because you can see that's a code name, pre-market. So this is a pre-daily high and low. This is a pre-market. So for you to know that I'm not just talking. I have the system working on. I've created a compile it. There's no error. So what I did was to back test it. Now, I backtest it using the system as, okay, this is the stop loss level, this is the TP level. Very simple system, but that only trade price action. Simple system, price action, automation. And if you notice on the settings, I'm testing it on two pairs now. Let me say I test it on GDP USD. This is GDP USD back test. I'm testing it from February of this year to last month, which is September. So that gives me a little bit of information that I can use to make the decision. So I said, okay, do the back testing for me and show me what the result will get. Now, if I hit the start button, automatically it will start working. Now it's testing the information and it's creating the trades. Now I want you to see something. Let me slow it down. You see, it's creating and executing trades. Let me, I'm trying to slow it down so that you can see trade open. Okay, you see that? You see that trade open? Stop. You see that trade open? Look at that. That is a buy order. Look at where it opened from. First, the market created a pre-market high and low and set up that pre-market high and low twice. So the first one was open. I'm not sure where this sell order really triggered until the trade closed. Okay, somewhere around here. No, not there. So we can see that it's activated. Okay, here. This is a buy order. This is stop loss. You see that? Stop loss, buy order. Look at it. Buy if after market break the structure high and give us opportunity. So there is a condition here. 10 pips, I'll be 5 pips away from the breakout, then buy. And look at the market because after the breakout, we anticipate if the market move a little bit higher, we anticipate that the trend is going to go in that direction for the day. And this is 5 minutes time frame. As you can see, the stop loss, the TP is somewhere there. This may not hit TP, may come back to his stop loss. I'm not saying that every trade must be a profitable one, but this is the system. But at the end of the day, after back testing from February to the end of the month, well, I mean, to the end of last month, which is about 7 months interval, you're back testing. Normally, I would do 1 hour back, 1 year back test. I would do 1 year. I would do 1 year back test to give me enough data to make a decision to use the system or not. If it's not profitable within 1 year system, 1 year progress or time frame, and then I know that I'm not going to use that system. So if it works, all I need to do is to multiply it into different assets and see how many assets I can use on that EA. If I can use 5 assets on it, then I'll put the 5 assets on the EA and put it on. So all of them trading together will give me a profitable month, a profitable week, a profitable year. So that's the way you want to think about it. But become a programmer indeed, that learning how to code or learning how to use create a system with expert advisors without coding. Those are the conditions there. Either you learn how to code it or you do it without coding. Those are the two options. But you have to learn to do it because buying EAs is not the way you should start, except you're a beginner. In other words, if you're already a trader, learn how to code it. If you are a beginner, yeah, that's fine. Follow somebody who does manual trading and eventually convert it into um expert advisor. So he created a system like this, and then you know that he knows what he's doing, not just a random MetaTrader 4 or what do you call it, MetaTrader platform where people just go and buy rubbish and then they trade it. It doesn't work. They don't understand the system. They can't modify it. They can't even optimize it. They don't even know how to optimize EA. So all of those things you have to learn as well in addition to manual trading. So let me finish this back testing and then see what happens because it's going to take a while. So we are on this trade right now. As you can see, the profit has increased in period of time. As you can see, it's profitable. The system is profitable. We are now in 30, is driving between 30,000 and 31,000. So now the whole month has been back test. The whole February to September this 2024 has been back test. So we want to see the results. So I'll take that off and then go to graph. And this is how the graph look. So there was a period where trade was constant. That means the market was flat. There was not much going on. And your drawdown was just there. It wasn't less than what you expect. So then price pushed and rallied and became profitable over time. You see that now? It became profitable over time. And that's what you want to see. So let's look at the backtest information. Now, in the backtest information, we have 100% future guaranteed backtest. So in other words, if we're going to do out of sample analysis, out of sample test in the future, that means outside this date, which is September, if we start trading it, from today, from this month, next month, and other months, it's guaranteed that it may be successful. It may be profitable 100%, giving you that ideology that is going to be successful. And historical quality as well. It also shows that looking at the historical quality, I mean, the historical data, if we should look at it, it's still profitable as well. So that's what it's telling us. And then we have number of bars that will be scanned, which is great. And then look at that. Initial deposit was $25,000 and total net profit made in less than how many months? In less than 7 months was $6,000. So you were able to make about $6,000 on $25,000. That's amazing. That is amazing. So here is telling you that the profit factor is 2.13. That is amazing to know that profit factor can tally within 2.13. Now, this one, I've not done optimization. I've not done any optimization on it. I just program it to trade in 5 minutes time frame and also to take TP at 30 pips and stop loss at 5 minutes time frame. I do manual trading on 5 minutes. So I understand if I'm trading on 5 minutes, I know that my stop loss is no more than 10 pips. I know that. So any workable system that you have to trade on 1 minute or 5 minutes, your stop loss should not be more than 10 pips. If you have 10 pips, more than 10 pips on stop loss on those time frames, then you are not, your system is not, it's not designed for that time frame. It shouldn't be put on that time frame. Yeah. So with that sense of understanding, I have that in my mind. And I know the market can go to 30 pips on a 1 minute time frame in profit. I know the market can go up if it goes in the right direction. On 5 minutes, it can go to 30 pips, which is easily achievable on GDP USD, Euro USD, and all of these major pairs. So for that reason, I just leave the stop loss like that. Now, every other calculation, which you can see here, is inside the EA, which is the timing, because I have to time the market and then push on in it. Candle behavior is you have to learn. It's not something I can explain here because this is not indicator based. This system has no indicator in it. So it's just trading price action and timing. That's all. It's all about logic. So that's exactly why it's profitable to this extent. So this is kind of thing. If I put it in another pair, it may end up profitable, but I designed it for GDP USD because that's the pair I trade most. So I can now work on other pair to trade in the same direction with it. But they must be pairs that trade in London section. I'm not going to use Asia pairs on it because it will not work. I'm not going to use Tokyo pairs on it because it will not work. I'm not going to even try to use London and New York pair on it because it will not work. It may not work. I designed a system to work on only London section, market opening session, pre-market section of London section. That's all. Once that London session is done by 4 o'clock market close, I should have hit my TP for the day and I'm done. If there is an opportunity. Now, if you go back to the back test result, you notice that only 35 trade was taken in all this period. So not every trade. This is why one of the things I like about this. The system will tell you when the market is suitable to trade. So that's what I've caused it to do. I made it to trade in a suitable condition. So it selects good trades. Of course, there were losses. I mean, the market was able to, the market lost about 5,000 out of 12,000, but it retained more than it lost. That's the beauty of the system. You want to see a system that can retain more than it lost. If you see a system that has lost about 15,000, and he made about 20,000. He lost 15,000. He only retained 5,000. I should be skeptical about that. I'm thinking, okay, why will he have to lose so much? What is the system? Why is the system losing so much? I would think about it. And I was okay. I don't like that. I want it to be able to retain more than he lost. That's the way you figure it out. And all of this, if you stay on the channel, subscribe, you will learn these things with time because I'm going to be sharing with you, teaching you a section by section. I'm going to create a playlist on my YouTube channel on expert advisors, and how to create your own, how to design your own using the software that I'm using, and then you'll be able to come. I'm not generating it. This is not generation. This is creativity. So there are software that are used to generate expert advisors. I don't like those ones because at the end of the day, they generate rubbish for you, and you have to keep generating, and then it doesn't make sense. So rubbish. But if you want to create a system, logically, intentionally, you are creating the system by what you can easily, you know, alter, just amend and work on modify them over and over again. And you can easily on MetaTrader 4 or 5, you can easily optimize them. I use MetaTrader 4 or 5 to optimize. That's all. In less than 1 month or so, optimization is done. And I can see results on different pairs or different time frame or different stop loss or take piece, and everything is shown. So these are the things you will learn over time as a trader, especially those of you struggling with your emotion. You just put the bot in and leave it. For instance, now I have already put this bot here. The bot here, this is the bot for the previous one I did. Let me back test this one. I need to show you how this one works as well. This one is on GDP USD and Euro USD. I did this one last about 2 weeks ago. I've been working on this one. Now, this one is not comfortable to go live. I put it on live. It's called ROSI moving average. This one is indicator based. It's not price action, it's indicator based. I did one price action. I'm still working on it. But this one is indicator based. It's just two major indicator, moving average and RSI. And over time, it's been profitable. So I have to put it on the live account. This is activated now and is on 15 minutes of Euro USD and 15 minutes on his what do you call it, GDP USD. So they are there, but because those pairs are not moving right now, no trades, which is fine. So I have them on two pairs, or have that EA on two pairs. So the other EA is this one, which I'm talking about, which is pre-market. This one here. So that's the one I'm working on. That will go live from next week or this end of the week. I have to look at the market and see, and I'll put it live because it's a very profitable system as well. And yeah, if you have any question, any comment for me, it's almost 10 o'clock. I'm rounding up soon. If you have any question for me, let me know. Put it on the comment section. If you're watching on YouTube, for those of you here with me, the mentees, you can ask your question quickly. Let's go. Let's take your question. I've been talking for a while now, so let's take your question. Yeah, no one is talking. Everyone is okay. Did I answer everyone's question? Hmm. Or have I been talking to myself? No, okay, someone ask a question. Uh-huh. No question yet. Okay.
We get what you said
All right.
concerning the AI, but I can say for today you are a little bit faster today on it. Personally, to me, I couldn't gather correctly the information on the AI today, but it's all right. I believe, as you said, in a consequent time, you are gonna deliberate more on that. But I love it. I love it.
Hmm. Okay. Okay. It's all right. I believe I should say it. I'm trying to see there are comments on YouTube so I can be able to take those comments. Again, like I said, it's not a difficult thing. It's just a matter of time. I've been working on learning how to use uh, create expert advisors for myself without buying rubbish because I bought some rubbish and they didn't work. I thought I can do this thing. In fact, the rubbish I'm buying, they are not even better than what I've done so far with my own learning it. So I said, what's rubbish? What's that? let me do it myself. So that's the reason I'm doing it myself. And like I said, it's easy. The more you do it, the better you get. And that's what has happened to the process over time. So um you can have that going on. And again, the fact that you can be updated anytime, you can always pull back the EA if you notice that it's losing a lot. Pull back the EA, put it back into the system, optimize it, and find the best setup for it for this season, and then upload it again and start trading. That's one of the beauty of it. So it's a great deal. It's a great deal. So it's something that let me just back test this one for you to see, which is the RSI moving average balls. So this is the RSI is based to work on 15 minutes time frame, and there are setup for it. So I will load the file RSI bot, which is 15 minutes. Oh, so first let's do Euro USD. I've loaded the setup because I did optimization and I've already come up um with what do you call it, a set file for it. So there's a set file for it already. So let me just go through the settings so you understand. Moving average is 10 according to the set file, and stop loss is 22 pips. TP, that means 1 to 2. As you can see, is a profitable system that target 1 to 2. That's all. So if you trade 100, take 100 trades on 1 to 2, 1 to 2, definitely you will discover that it will be end up being, if a good system, it will end up being a profitable system once you have the win rate calculated. And here we have the RSI, which is the RSI here, slow moving average. I can see it's a very simple system that trade on that. And then percentage is trading on percentage, which is 1% per trade. So whatever account you have is traded, take 1% on it. So this is a slip rate and number of trade is 1. So very simple. And let's back test this. So I'm going to hit the start button and let's see how this goes. Now, this is a bit busier than you see now. This is a bit busier than the other one. Um, you can see that's the first trade that just hit TP. This is a bit busier. There could be multiple trades in short time. Um, yeah, there could be, as you can see. So it shows you the trade is going on, and there are different conditions in it. So there are multiple conditions that are put together inside the EA that will activate it. So, but it works with the RSI. It will trade along with the RSI. It tells us in direction with the RSI to take the trade. That's what it does. So as you can see on this trade now, it was almost close to TP, but it couldn't take it. It didn't hit it. So now it came all the way down to entry. Eventually, it will be a stop. It will be a loss because the market has shifted from trend to trend. Now, that is a TP error. It's a TP problem. So sometimes the trade will not hit TP. It will be very close. So in that case, if you're in that trade, you will close manually. That's what you do. Once you see it, you see that price is playing around the stop loss TP area. It's not trying to hit it. Just close out. Close the trade in profit and leave it because it's better. Or you will move your trade to break even. Don't just leave it like that. You have to always monitor your EA whenever trade is on. Once trade is on, you monitor the movement. You have to monitor the movement. So in some trades, you will see them go into a loss. Don't just touch them, just leave them. Sometimes the trade is going to a profit and is struggling to hit TP is also there. Like you can see now, this is multiple loss in two places. It had a multiple loss. So if you see that kind of thing going on, you say, like, oh, this system is not working, it's bad. No. Remember, it's trading by risk to reward ratio 1 to 2. And because it trade by risk to reward ratio 1 to 2, even though you have 5 loss as consecutive losses, and then you have about 4 win, it will cover up the loss and recover you into profits because the system is designed in such a way to trade in the direction. Okay, like this trade down. Did you see that? It was very close to TP and eventually hit it. So in such a case, you can just manually close if it's playing around, but it still hit the TP. You see now. So this one is more active. Is more active than the pre-market high and low. The pre-market high and low is a systematic way that it works in such a way that it takes time to pick um good setup, and that's why the profit factor is very high. It takes time to pick setup. As you can see, this one, you see, several occasions, price try to hit TP. So with this now, this can be modified. So it shows that the TP level, that this range of market trade at this time could be that. So this one can be manually executed. Instead of you just waiting for the stop loss to hit, you look at it and you see that it's very close to TP and it's playing around, it's creating consolidation. Just close the trade in profit. That's how you manage your EA. You can't just leave it like that. Just in case you have access to this one, this is how you should trade it. I'm just talking you through them. And at the end of the day, let me speed it up. So I just wanted to show you how the system works, how it trades. So let's speed it up and you can see at the end of the day that we are in profit overall for the period. Okay, we're able to get to $35,000. So that means we on this pair, on this trade, let me show you the graph. This is how the graph look. Not too bad, profitable, but not too bad. That's great. You can see that there was a moment where price was like trading in a slope, few losses, and then it recovered quickly. And then another, it was constant here, flat. The market was not conducive within, where was that? That was last 2 months. The market was playing somehow, and then eventually it recovers again. And then lastly, this is the couple of few months there. That was last month, which is September. The market was playing up again. This is just one pair, and it ends that. So we eventually hit a target of that. So let's see the back test history. As you can see, this is exactly what I'm talking about. That a system like this need to be worked on, although it's very profitable. So most of the system that you have with moving or system that it's not like this most of the time. So you see that it was able to retain 10,700 in 6 months, approximately 7 months. In 7 months. So in 7 months, that means every month we're making 1,000 plus on the account, which is very nice. Very nice. I mean, on a 25K account, every month you are withdrawing $1,000, a minimum of $1,000 every month on a 25K account. And mind you, this is just one pair. One pair. It's not like you have it on 2 pair, 3 pairs put together, which is possible. You can trade up to 5 pairs with a system. At the same time, as long as you manage your risk, you don't expose your risk too much. Instead of risking 1% on each pair, on each trade, you can break it down to risk 0.5, 0.2, 0.3, 0 point something percentage, and then split that into different of these trades, and then just allow them to trade so that you are not exposing your risk. All of these are risk management. But looking at this system now, profitability factor is 1.4, which is great as an expert investor. That's the kind of system. A minimum is 1.2. Anything lower than 1.2 is not profitable. Profit factor. And a lot of information there that I would have liked to show you. There's a lot of information all the way down. Look at the data. It's telling you the system. This is profits and losses by weekdays. So weekdays, the only day that was lost is Thursday. Every other week was profitable. So imagine you have a trading system that is almost profitable every week. Look at the months. I told you September was bad. So so every other month, apart from, okay, we have May. So out of 1, 2, 3, 4, 5, 6, 7, out of 7 months, out of 7 months, all right, 5 months was profitable. How do you explain that kind of system? Out of 7 months, 5 months was profitable. So in other words, you could have withdrawn more than $1,000 in a month compared to the rest. So again, this is statistics telling us what is possible with this. So we can see the drawdown is very minimal because we have a stop loss that it is not a what do you call it, grid trading system where you have multiple. No, 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 no. This is you can use this one to trade any profile. They will not flag any error, nothing. You can use it to trade. It's just like manual trading. One trade per day, one trade per trade. That's it. And it hits stop loss, it hits TP. The stop loss is TP. Everything is programmed to trade manually, but it's a automation. But it's a manual system put into an automation. So no profile will flag an error. Nothing. No profile at all will have a problem with this one because this is how it's designed to work. So you can use it literally to pass a profile. Literally. So even looking at the system, when did the profile pass this test? If we were to look at the back test, when did he actually pass? Let's look at it. I mean, it passed. Let's look at the days actually. So the first second month, the first month, the second month, you would have passed. That's what exactly we're showing. The first month, the second month, you would have passed based on the system. Look at the entries by month. So in the February, there was not a lot of entry. In month of March, we have 11 entries. And then in the month of April, we have over close to 20 entries. And in the month of May, we have over 20 something entries. So the entries were increasing based on the market conditions. If the condition of the market was bad and poor, the entries would be low. This is what I call system because it preserves risk. It helps you to maintain your daily drawdown. It helps you to maintain a lot of drawdowns, really. You are not exposing your trade. That's exactly that data there. Entries per month. It gives you exactly. So the better the condition was, but again, on the month of September, the market was not profitable, but we have several entries. So how come we have several entries? It's because yet the trade was not profitable, all right, in that market, but the conditions was okay. There was so much volume in the market. That's why. There was so much volume in the market. And because there was so much volume in the market, our stop loss was easily hit before it goes to the direction. Our stop loss was easily hit before it goes to the direction. So that's the reason why we have some losses on that market. You can always look at the back test history, which I have done. I'm just interpreting it to you. And then entries by weekdays. So we have entries by weekdays. So Monday, we have about several entries there. That's beautiful. So we have entries by hour. So all of this information is clear for us to find out. And you can see how profitable the system looks over time. So now, question, how many pair can this go? Only at the moment, we're only testing it on two pairs, GDP USD and Euro USD. So this is just Euro USD. And I also have what we call out of sample data. I have a larger data information that can be backtest for a long period of time. Like you can backtest 3 years or 2 years or 4 years to see if the system is actually profitable during the period. So I've done that. I'm still working on that. It's not that profitable with that long term. This is Euro USD. We have a lot of data here. Let's say we backtest from 2020. Not 2020. Let's say 2020. All right. That's 4 years. Want to look at 4 years interval to backtest the system and see if it is profitable or not. Now, we may use every tick, but the market is going to be slow to do it. So because I'm using already open data, I can use open price only, or it depends, but it will still give us the same results anyway. So let's see. Um, it's going to take a while because it's a longer period of time. It's already working now. Okay, yes, it's already working. As you can see, it's already working. Now, this is when you are trading your personal account. That's when you do this. You want to and test it for a longer period. Okay. So this is 3 years. Sorry, 4 years period. All right. 4 years result has been given to us. So let's look at the data. Let's see what happened in 4 years. This is how the graph looks. Crazy. So there was no profitable section for a long time. The market was losing, winning, losing, losing. But it was ranging between $24,000, $24,200. So we have a little bit less than $24,000. But from 2023, the system began to become profitable. So let's look at the back test over time. You see, this is the situation. The profit factor of the system for a longer period with test is not that great, because in market conditions, the system may not have worked so well before 2024, before 2023, 2022. So here in 2020, that was obviously COVID era. Everywhere was in this. There were so many indecision in the market. So it was COVID era. So we have consolidation in the market. 2021, 2022, there was COVID issue. So the market was consolidating. It was from 2023 when COVID issue was lifted. Everybody cannot go out. Things were now removed, on the boundaries are removed. Market is coming to normal. That's when you now saw profitability. So once you backtest this kind of thing, you should know why this condition were like this. So this is exactly how you test something to find the profitability. So we can see that when the COVID issue was lifted, all right, lockdown was lifted, everything was lifted. Now after the COVID, we see the market started going up. So the system started working. So even till now, you see, the present time, the market is still working well out of sample uh, uh, process. We can see it's still profitable. So why? Because the market condition is okay now compared to when it was 2020, 2021, 2022. You see that now? So those are the things you look at for when you're backtesting a system. You should know what affects it in such a period and what is not affecting it. And that's what I've done on this one. So I'm still going to do more of these things. We have that the system was able to allocate profit of 319,000 for that period of 4 years, but lost majority of the money to the market and was able to retain $28,000. So in 4 years, the market was able to double the deposits, the investment. There is no banking industry that will be able to give you that. I don't think so. In fact, you will, if you sign up for investment funds organizations where you have hedge funds and all of that, and you invest in their funds, they will give you 10% the maximum per year annual on your return on investment. 10% per year. Sometimes 14 if you're lucky about that. 14 to get the right one. Most of them will tell you they will give you 20%. That's the highest you can get. Hedge fund will not give more than that. And how many years do you think it will take you there? 5 years. That will take you 5 years. They give you 20%. That will take you 5 years to double your account. But this system was able to do it in 4 years. Now, this is just based on the fact that we are only trading one asset. Imagine if we spread the asset across, like 1 to 2, that's called diversification. Diversification. You have to diversify it. Okay. Diversification. So as you diversify your market, you are actually giving room for more profitability and minimizing your risk. Yeah, diversify is important. You got to diversify. That's why you trade multiple assets. You with system like this, you're able to do it. But if you trade manually, emotionally speaking, it will affect you. if you're a day trader. Except you're a swing trader helps you to diversify into different assets. That's the only advantage. You spread the risk into different assets. That's the only advantage of swing trading. It helps you to diversify. But as a day trader, you can't diversify. You only stick to one pair and then stick to that pair. When you lose, you gain again. And it's a short-term income, profit margin. All right, I think that's all about the EA for now. I'm still back testing now. If you want to join me in that section of back testing, during this week, I will come online. I'll share with you some of the things I'm going to be doing, and we'll have a channel, a section for that on our channel. We'll be doing back testing. Watch out for the videos. I'll be posting them out on the back test and the EAs I'm writing, coding up. I have several EAs I'm working on. I'm personally coding them. I'm not buying any rubbish. I'm the one working, creating them by myself. I'm working on them. Two of them is already ready to go to the market live, which one of them is already live. The second one is the pre-market one, pre-market section, which I just finished up this morning, and that one will be going live this week as well. So I'm gonna put them all live and just to see them how to trade on funded accounts, funded accounts. I'm gonna buy funded accounts for them and challenge and then look them out as they pass them as we go. So I'm gonna be showing you results as we go regarding those stuff. So get ready for that. I think that's all we can take today, guys. I believe you guys enjoyed your section with me. It was fun. Let's see what the market is doing right now. At the moment, we're still having the market struggling within that area. Yeah, it's necessarily gonna happen that way. I told you. Look at that. For those of you with like, look at that. Look, did you see what just happened? Ah, did you guys see this? Look at that. Did you see that? And that candle is closing in under 31 minutes. But look at the difference. You will discover at the end of the day, this candle is bullish. It will go up because this gap must be filled. That's why you have to keep patient. And look at this. This one is still playing around that zone because um obviously when it's gonna drop massively because of this imbalance that is creating here and liquidity. So I'm expecting that to happen. Gold. Gold is now okay. It didn't retrace back to that area. It's still playing around there. What else? This one. Okay, I've just checked that one. And this one again. This one, the same thing. You this. Did we take? We didn't. So we are still on this trade as well. All right, guys, that's it for now this week. Well, just watch your trade. If you're already in the trade, watch them. Go and watch the weekly forecast analysis I did with 42. Watch it and look at the entries and see if you still have opportunity to get in. If you have opportunity to get in, please get in. It will help you. It will help you and also those opportunities to trade out there. All right, guys, thank you so much. And
Thank
for
you.
those of you on YouTube, I'm gonna say goodbye to you, and we will talk